All right, so we're back and ready to unpack a story that never seems to end.
Yeah, it just keeps getting more interesting.
The GameStop saga.
Yeah.
And, we can't talk about GameStop without talking
No.
about
Roaring Kitty.
the man, the myth, the legend, Keith Gill.
Right.
DeepFkingValue.
Right.
If you've been following along with this whole roller coaster, you know that we have to go deep on this.
Oh, yeah.
We have to talk about his original bet, this kind of surprising comeback, and what it all means for the future of GameStop as a company.
Well, and what I think is so fascinating about Gill is that he really embodies this shift that we're seeing in the market.
Yeah.
He started as a regular guy, like a financial analyst who loved video games and ends up kind of challenging Wall Street norms.
Totally.
Armed with nothing more than, his research and a webcam.
It's a real David and Goliath story for the digital age.
Absolutely.
And you know what's so interesting about this is that this all started back in 2019.
Right.
When most people had written GameStop off as a dying brick-and-mortar store.
Yeah, they were like blockbusters all over again.
Yeah, what did he see that everyone else missed?
I think he took a classic value investing approach, but with a twist.
Okay.
So he digs into GameStop's financials.
Huh.
He looks beyond the surface level struggles.
Right.
And sees potential that the market was overlooking.
He called these cigar butt plays.
Exactly.
These companies that other people had discarded but still held some value.
Yeah, it's like finding that, last little puff in a discarded cigar.
Okay, so we've got a mountain of sources here.
Yeah.
We've got Gill's early YouTube videos, articles dissecting his strategy, even snippets from his congressional testimony.
Oh, wow.
So let's rewind all the way back to those early days
Okay.
and unpack his original GameStop thesis.
Yeah, let's go back to the beginning.
So when you go back and you watch these videos,
Yeah,
what's so striking is how meticulously he lays out his argument.
absolutely.
He's not just saying buy GameStop.
Right.
He's dissecting financial statements,
Yeah.
highlighting undervalued assets, and pointing to a strong balance sheet.
Things that, even seasoned investors might overlook.
Totally. There's a real depth to his analysis. He's talking about management changes, strategic partnerships, and the potential for GameStop to become this premier gaming hub.
It's really remarkable.
And this was way before the whole NFTs and metaverse hype.
Right.
But he was already talking about GameStop transforming itself for the digital age.
He was ahead of the curve on that one.
So he wasn't just riding the meme stock wave.
No.
He genuinely believed in GameStop's long-term potential.
Absolutely.
And he wasn't afraid to address the elephant in the room,
Which was?
the transition to digital gaming.
Right. Everyone was wondering about that.
Even pulling out quotes from industry leaders like Xbox's Phil Spencer,
Yeah.
who acknowledged the enduring appeal of physical game sales.
Right.
So he wasn't just speculating.
No.
He was grounding his analysis in real-world data and trends.
He did his homework.
And what's so impressive is that he was questioning assumptions that everyone else was taking for granted.
Absolutely.
So while Wall Street was writing GameStop off, Gill was digging deeper, looking at the data, and challenging the prevailing narrative.
He was like, wait a minute, there's more to this story.
And then, of course, there's the short squeeze element.
Right.
He saw how heavily shorted the stock was,
Mm-hmm.
and he recognized the potential for a massive price surge if enough retail investors got on board.
Yeah, that high short interest combined with his growing influence on social media created a real tinderbox situation.
It was only a matter of time before a spark ignited it.
For sure.
And Ignited did in January 2021.
Oh, yeah.
Gill's Reddit posts go viral, triggering a buying frenzy among retail investors that sent the GameStop stock price soaring to unimaginable heights.
It was unlike anything we'd ever seen before.
Yeah, it was an unprecedented event, a true David versus Goliath moment,
Right.
where individual investors, empowered by social media and inspired by Gill's analysis, shook the foundations of Wall Street.
They really showed them.
And throughout all of this chaos,
Yeah.
Gill maintained that he was just an individual investor who liked the stock.
Right.
He even testified before Congress defending his actions and emphasizing his belief in GameStop's potential.
He stood his ground.
I think his consistency is remarkable.
No, absolutely.
He never wavered from his original thesis,
Mm-hmm.
remained transparent about his investments, and didn't engage in any shady tactics to manipulate the market.
He played by the rules.
He was simply sharing his research,
Yeah.
and it resonated with people who felt disenfranchised by the traditional financial system.
Right.
They saw someone like them challenging the establishment and to some extent winning.
It was inspiring.
And that's what makes his story so compelling.
Yeah.
It goes beyond the money. It's about challenging assumptions, empowering individuals, and highlighting this evolving relationship between Wall Street and everyday investors.
It's a story for our time.
But as we know, this isn't just a story about the past.
Right.
After a period of relative quiet, Gill makes this surprise comeback.
Oh, yeah.
And that's where things get even more interesting.
That's where we pick up the story next.
Exactly.
Okay, I'm ready. So after that wild ride back in 2021,
Yeah.
Gill kind of stepped back from the spotlight, left his job at MassMutual,
Right.
basically went silent for about 3 years.
Yeah. It was like he vanished into thin air.
Right.
And then in May of this year,
Yeah.
drops these cryptic memes on his X account,
Oh, yeah, I remember those.
sending his followers into a frenzy.
Of course. I mean, everyone's trying to figure out what's he doing, what's he thinking.
Is he back?
Is this it?
Is he going to make another move?
What's going on?
And the timing was so interesting, too.
Yeah.
Because GameStop and AMC were seeing another surge in their stock prices.
Right.
So everyone was kind of on edge,
Yeah, they're all like waiting with bated breath.
trying to decipher his messages.
Still trying to read the tea leaves.
It was like he was playing a game of financial chess.
Oh, yeah.
And the whole world was watching.
The whole world's watching, waiting for his next move.
So what happened next?
Well, in June, he drops a bombshell
LA?
Reddit post
Okay,
revealing his massive GameStop position,
Oh.
millions of shares, and even more call options.
So we're talking about...
You're talking over $180 million invested in GameStop.
Wow. That sent shockwaves through the market.
Oh, absolutely.
GameStop stock price goes through the roof.
Of course.
And then a few days later,
Yeah.
he does his first YouTube live stream in 3 years,
Right.
pulling in a massive audience
Right.
eager to hear from him.
They want to know what's he going to say.
What's he going to say? What's he been up to?
Yeah, what's the scoop?
So he addressed a lot of concerns in that live stream.
Okay.
You know, he talked about his continued faith in GameStop, even though the company was still struggling to adapt to this, like, digital-first model. He acknowledged concerns about stock manipulation, but reiterated his belief that GameStop had the potential to leverage the new console cycle to its advantage.
Which is interesting because a lot of people thought that the console cycle was dead, that everything was moving to digital.
But he's saying, no, there's still a place for physical games.
There's still a place for GameStop.
There's still a market for this.
Yeah. He's sticking to his guns.
It was a bold stance to take.
It really was.
You know what strikes me is his unwavering conviction after all of the scrutiny,
the lawsuit.
lawsuits, media attention.
Yeah, he went through the ringer.
He's still all in on GameStop.
It's wild.
It's almost unheard of in a situation like this.
Absolutely.
He is doubling down on his original bet.
Yeah.
And, you know, it's interesting because his comeback coincided with another surge in GameStop's stock price.
Right.
It's hard to say if he caused that surge
Yeah.
or just rode the wave.
Right. Was it him or was it just the market?
But there's no doubt that he amplified the attention
Oh, for sure.
surrounding the company.
Absolutely.
It's difficult to separate cause and effect in these situations.
Yeah, it's all intertwined.
But it raises a lot of questions
Oh, yeah.
about the power dynamics
For sure.
in the market.
Yeah.
Makes you wonder, how has social media changed the way the stock market operates? Can individual investors really move the needle like this?
Yeah.
And what does it all mean for the future of companies like GameStop?
That's the million-dollar question.
Right.
Get a clearer picture.
Yeah.
I think we need to analyze Gill's investment strategy,
Right.
particularly his use of call options.
Right.
Because that adds another layer of complexity to this whole saga.
Okay, so let's get into the nuts and bolts
Yeah.
of his investment approach.
Let's do it.
What stands out to you about his use of call options?
Okay.
And how do they factor into his overall strategy?
Well, you know, Gill's use of call options is like adding rocket fuel to his investment strategy. It magnifies both his potential gains and his potential losses,
Right.
making it a very high-risk, high-reward approach.
So for those of us who haven't spent hours staring at option chains,
Yeah.
can you break that down for us?
Sure.
What are call options and how do they work?
Okay, so imagine a call option like a coupon that gives you the right to buy a stock at a set price.
So?
That set price is called the strike price. And you have the right to buy it before a specific date,
Okay.
but you're not obligated to buy it.
Right.
Just like a coupon doesn't force you to buy something in the store.
So it's like reserving a stock at a certain price.
Yeah.
But you only have to buy it if the price goes up and you want to cash in.
Exactly.
Okay.
If that stock price climbs above your strike price,
Yeah.
your option becomes valuable.
Because
you can buy the stock at that lower reserved price
right.
and then sell it at the higher market price.
Getting the difference.
You got it.
Okay, so the higher the stock price climbs, the more money you stand to make.
That's right.
But what happens if the price doesn't go up?
Well, that's the risk.
Okay.
If the stock price stays below your strike price by the expiration date, your option expires worthless.
Meaning?
You lose the money that you spent buying it.
So it's a gamble.
It's a calculated gamble.
But a gamble nonetheless.
Absolutely.
And Gill's been using options aggressively.
He has.
Which means his gains could be huge, but his losses could be equally as massive.
Precisely. He's leveraging his capital to amplify those potential returns.
Yeah.
It's a strategy that can pay off spectacularly, like we saw with his initial GameStop gains.
Right.
But we also saw the flip side earlier this year when GameStop stock dipped and he saw millions of dollars vanish from his portfolio.
Even though he held onto his shares.
Right, because those options expired.
Which brings us to the big question, will his bet on GameStop ultimately pay off in the long run?
Right. Can they really pull off this transformation that he envisions?
I mean, can GameStop really pull this off?
Honestly, it's tough to say. I mean, the gaming landscape has shifted so drastically with digital distribution dominating the market. Even with the new console cycle, GameStop faces a real uphill battle to reclaim its former glory.
So the odds seem stacked against them.
To a certain extent, yes.
Okay.
But remember, Gill isn't betting on GameStop simply becoming, a bigger version of its former self.
Okay.
He sees them evolving, carving out a new niche in the gaming ecosystem.
He's talking about them becoming this experiential hub.
Yeah.
Embracing new technologies like the metaverse or NFTs.
Right, exactly.
But is that a realistic vision?
I mean, the gaming industry is constantly evolving.
Yeah.
So there's always room for disruption.
Right.
Whether GameStop can successfully execute this vision remains to be seen.
So for those of us who have been following this saga from the beginning, what's the takeaway?
What can we learn from Keith Gill and this whole GameStop story?
I think Gill's story really underscores the importance of doing your own research, understanding financials, and forming your own investment thesis.
Don't just blindly follow the crowd.
Right.
Don't get swept up in the hype.
Do your homework.
Yes.
Be critical.
Think for yourself.
And think for yourself, exactly. And it's also crucial to be aware of the risks involved.
Always.
In any investment. Especially in volatile markets like we're seeing today.
Right.
Never invest more than you could afford to lose.
Words to live by.
And finally, despite the risks,
Gill's
story shows the potential for individual investors to make a difference, to challenge the status quo, and to disrupt these traditional systems.
To shake things up.
And to shake things up.
It's a reminder that sometimes even when the odds seem stacked against you, conviction and a willingness to challenge assumptions can lead to unexpected outcomes.
So is Keith Gill a visionary investor or a lucky gambler?
I don't know.
Only time will tell.
Only time will tell.
But his story is far from over, and we'll be watching closely to see what unfolds next.
It's going to be interesting, that's for sure.
That's the beauty of the market. It's full of surprises.
Absolutely.
Thanks for joining us for this deep dive into the GameStop saga and the enigmatic RoaringKitty.
It's been a pleasure.
Until next time, keep learning, keep questioning, and as always, happy investing.